TradingView chart that I have up. Can you guys see this? Yes, everybody can see TradingView? Euro USD 3-minute and 5-minute chart? Yep. Okay, awesome. Awesome. Okay, cool. So what I'm doing here, so this is when I'm taking a trade, this is usually what I have up. The 5-minute chart on the right, 3-minute chart on the left. So for people who are new like Alex, so what you're looking at is a candlestick chart. Each one of these candlesticks represents a certain period of time. On the right-hand side, you see this 5-minute, which means that each one of these candlesticks represents a period of 5 minutes. So what's happening here is you see the price, if it's a green candle, you see the price opens here where the body of the candle begins, and the price closes here where the end of the body, or the body ends up here. So the wicks will represent the extreme points of the price movement inside this candle. So at one point, the price did reach all the way up here, but the pressure to sell ended up pushing it back to where it eventually closed at the end of that 5 minutes. So it depends. So, if we're at 4 minutes and 55 seconds and it's still up here, then 5 seconds, 5, 4, 3, 2, 1, it closed up there, then the body would have been up here. But let's say I don't know exactly when this candle pushed back down. But anyway, open for a green green candle, open here, close here, and you can see the wicks are the extreme. The same thing on the opposite side too. So at one point here in this red candle, so right here, all right, we'll just go right next to it here. It opens here. Some point the price was driven up here, and then pushed down, red, negative, in the opposite direction, ended up closing here, small wick. Right? You can kind of see this candle, active candle, currently moving right now. So that's kind of like just the basic of how a candlestick works and kind of like what it signifies. So, all right, so what do? I like to start with, I need to know the significant historical price points. How do we figure those out? So for traders, we know these as support and resistance lines. So honestly, sometimes I start with the day. Sometimes I do. Because I want to see if there's anything significant, and it has to be relative, like around this area, right? So now I'm seeing here, turn to the left here. So maybe you see this right here. So you see this point where it touches 1, 2, 3, 4, 5. You have a wick here, 6, 7 wick, and then it even is relevant over in this area too. 2 more times. So I would probably draw a line right there. Just to mark that level. I won't go too far back on the day. I'll zoom this in. So that's a good one, right? So this is you can see this is very clear. 1, 2, 3, 4, 5, 6, 7, 8. Like there's so many touches on this specific price area, right? And I'm just going to use lines for now. Usually I do a rectangle for a zone, because there's some times where you get burned on the exact price. I focus on too much on the exact price, but specific zone and recognizing the price action or the market structure is happening around that area instead of that specifically that price is a little bit more gives a little bit more room for kind of like decision, right? So since you're not oh, hit this price go, just may give you a little bit more patience to be like, oh, let's see how it reacts in this zone as opposed to at this price, right? So for right now, I'm just doing lines, but I usually draw rectangles. So let me back this down here. So I'll go mark up the day. Then I'll probably go to, I may take a look at 4 hours, but usually I don't if I have the day. But just for the sake of being honest, let's see if there's anything that's even relevant here. So you see prices. Looks like it's coming up a little bit here. Let's see if there's any significant support resistances. So, see right here. Let me back this out a little bit. So let's see some zones here. So see here, you have one. See this one top here too. So you can almost see how this line, right? You can see it's a resistance here, and then it flips over and almost becomes almost like a support here. Boom, where it breaks down here. But you see price action, or price ends up, you see this doji here, and price ends up staying above this for some time. until it crosses back down. And even there, before it crosses back down, you see it stops. Hold on, let me zoom in on this. You see it stops here, gives a little bit here, and then some struggle here before it crosses back down. And it may go back up to it. So I would draw that. I like that one. I would draw that. Zoom a little bit more so I can give you something accurate. So it doesn't have, like I said, it doesn't have to be perfect. And usually I'm using a rectangle, so I'm just trying to get something that's like relatively accurate. So don't take this as like, set in stone. So roughly around like right there. Around there. It's good enough. All right. So let me come back in. Let me go to, let me check the 1 hour real fast. So I know this is like tedious, but trust me, it pays off. It pays off, it pays off. So here, and don't be, like I said, this is usually a rectangle, so this would cover this zone in here. So this would come down here and cover the bottoms here, so you don't have to move this down or anything like that. All right. So 1 hour.
Hey, Drew, just for the new people,
Sure.
Yeah, go ahead and do it exactly how you would do it, because they probably don't even know what that looks like. So.
Oh, do the rectangle? Yeah. Okay.
Yeah.
Let's do that. Let's do that then. Absolutely. Let's do that. So then let me go in here. Yep. So I'm gonna take it. I think it was like somewhere in here. So that means that price, but then we're looking for what's going to happen within this area. So that price would be what, like 1.21460 all the way down to 1.21372. So we're looking at price action, what's happening as price touches or comes inside of this zone in here. And the same thing, up here, since we have this, we'd be looking at all right, draw that out. So if price starts to come up in this zone, then we start to anticipate, okay, what could this possibly do, right? But until it gets to these zones, I'm not thinking about taking a trade. Even cool thing is, if you right click, if you do a rectangle or you do a line, you can right click it. I'm sorry. Oh. And you can add an alert. So that if price starts crossing into there, then you get a little ding and it'll pop up and you can go to that chart real fast and start to look at the price actions happening and then start looking at where you want, if you want to take a trade, what that trade's going to be. So you don't have to sit here intently like watch it the entire time, like just wait and watch for it to hit the no. So let me come back. So that we did the day, 4 hour, 1 hour. Let me take a look at, let me go to 15 minutes. As I'm looking just for things that's just relevant. Usually there could be more, there could be less. Looks like right now, even this one, maybe I put this one on here. So this little area. So you have like touches here, this candle close here, and maybe see this resistance here. And then again, it tests that again, comes up, and then ends up rejecting. It has a really large banker candle right here, a little abnormal. But as soon as it crossed up, it came right back down, and then you see it didn't cross back again. So I would say this is very significant. Level right here, and you'll see it probably become relevant as we go to the right too. Check this tomorrow or the next day if it comes back down. But the cool thing is, if you continue to scroll to the left, eventually you'll start to see that these prices have like great memory. Like, eventually, I don't know how this market came down again, but you start to see like these levels are relevant, and this is, look how far back we are, December 22nd in 2020. But this price level is still relevant. So this was looked like a little bit of, at some point it was support. again, all the way over back here, still 11. So now dip down under, came back up. So this is a 15-second chart. You probably see a little bit better on a higher time frame exactly what that looks like. But so for the sake of that, I'll put that there. So why do I do this then? And then we'll do one more. Actually, I'll just take this back to 3 minutes and get to my normal view again, where candlesticks are a little bit more normal. Oh, let me check the chat to make sure. Okay, everybody's cool. All right, great. All right, so this is my 3 minute left-hand side, 5 minute right-hand side. That's what I'm looking for. So here, it doesn't look like there's that much of a, let's see, example I can give, but I didn't cherry pick this example today, but let's just say this. All right, so let's say in the 5 minute chart, I'll just use this. So let's say from the historical that there was a price point here. And from the historical, there's a price point that cuts through here, right? So what am I looking for? I'm looking for price to start entering these areas. Bang. Boom. So I have this area, right? So historical, it's starting to come down or come up to a line, right? So let's say this one. So let's just start from here. Let's say we don't have this right side. We have no idea what it's going to do. Let's say that this price starts approaching this level, right? We see this sharp incline up, sharp increase up right here. Oh, so here's an historical level. Let's say we back it up. So here's an historical level. We see that for a long period of time, it was not breaking above this level. It tried once here, it did break above this level and immediately reversed back down. It retested this same line, this level here, but wicked, never closed above that. A new low here. You see here a wick up there, and then to the left, you see not much is closing above that line until, here, tested this, came down. So we can say this is a pretty strong, very, very strong resistance, because multiple times it's being tested here, here, but price is not really having a breakout past that. It's tested here. This would be the closest thing that may look like a breakout, but it immediately came right back down underneath that level. Tried to come up again, couldn't close past that level. So we go for a couple period of time. So then here's what happens. So as this price starts to approach this level, in each time it approaches this level, it could do one or two things. It's either going to continue in the direction that it's currently going, which is up, or it can do what it did the past, couple of times, 3 or 4 times, which is completely reject this level, and price will go down. But we're waiting. Now that it's approaching this level, we're waiting to see, because this is such a significant price point, because of the decisions that's been made in the past, that we need to know. So what we're going to anticipate is, if this breaks up, right, we're looking at price action here. So we see this start to approach, and we see this candle start approaching this level. It doesn't close there. So the next candle closes above this line. And do we get in there? No. Because of how hard it rejected before. Because remember, there's a candle that went all the way up here and ended up making a straight U-turn and coming right back around. So we want to be careful around this level based off of that historical price action. But as we start to see here, this red candle close, but didn't close below this. This next green candle comes up. I would start to say, if this next red candle does not force this price down below this marker, I'm going to get in here for a buy. Because we've had now 2 red candles that had opportunities to drive this price beneath this level. We had a good solid green candle that now has closed above this line. Another one, not really strong, but another green candle that closed above the line. So it could be a massive pullback, but it wasn't a massive pullback. This pullback could have happened and could have brought this price all the way back down here, but it didn't. it didn't even bring it below this line. You see how much it's respecting this level right here. Respecting this level. The next candle opens, drives the price up a little bit more. Well, Brent, we're on the 5-minute chart, so it'll probably be 5 minutes if I'm looking at this one. But I'm going to go back and forth so you can see on the 3-minute chart too, so we can analyze both. So see here. So we have this another one. This could be an opportunity for a pullback too, but it's still never. So this now I'm starting to think, okay, we've had 2 red candles, but neither one of them has crossed down past this price point. So I'm starting to feel a little bit confident that, you know, this may be a great potential for a breakout right here. So honestly, if I was trading this and I saw this candle, I probably would have entered here. I would have been confident enough to say, like, if this candle didn't close, I would have entered this trade right here for probably like 3 minutes. Probably 3 minutes there. So let me go back. Let me roll that back. That's what, 9, 12. That's 1250. Let me roll this back to what that's looking like on the 3-minute chart. So let me go on here. So it was a breakout, 1250. So here's what we're looking at. So here's the same thing we're looking at here. So this looks a little bit funny right here. Maybe not 3. I'm sorry. So this one breaks up. So remember, this 3 minutes, so it's an accumulation. So what you're seeing is maybe like 2 of these candles were, or maybe like 1.5 of these candles relate to, a 5-minute, right? Or give or take. So here we see this line here. This is 1227. 1227. So these 2 candles, or these three or so, will represent kind of like this movement right here, this big candle. I'm sorry, hold on, let me see this. I'm sorry. Let me back this up. 5-minute on the right. Okay. So if I'm looking at the 3-minute, I see this happen. I don't really like this on the 3-minute, but I like it on the 5-minute. I like this candle on the 3-minute, right at this point. But the majority of the time I'm watching the 5-minute, because what I'm looking for, which would be ideal for me, I don't know where my indicators went. What would be ideal for me is you see this right here. You see how my stochastic and my RSI kind of up, they're high. I would like to see if all 4, I don't know where let me see where my indicators went. Reset my chart. Anyway, I would like to see if both the 3-minute and 5-minute have the same direction, the same reading. The indicators going the same way for all 4 of the indicators. Both the stochastic and the RSI. If you're new, stochastic and RSI, we have to go through that, maybe another call. But for those who trade, then instead of looking specifically only at the indicator, we now have identified a significant, okay, there we go. So that's what we want. Right there. So this is at what, 1355. Get to this. So where is this at? 1355. Let's see what's happening. 1355 over here. Yeah. So here's what we're talking about right here. See, this is low right here. So this cross up at 1400. See, this is what I like to see right here. So you see at this point. So I'm looking for all 4. I'm looking for this price to break above a price point, right? Like, I did not cherry pick these at all. I'm going freehand right now. Just to let you know this is live. This is real. All right. So where does this happen at? Let's see, 14, right? So here happens. So let's say for an instance, we had a level here. Let's say there was a level here, right? Price is playing around, it rejects this, comes up, wait for the pullback, right? Because you're not entering right when this breaks up, because you still need a strong green candle. And also remember, there can always be a pullback. There can always be a pullback. I won't say it always will happen, but there always is the possibility that it will pull back at some point. So this pullback happens immediately. This next candle is a little bit scary because it's like it's not really telling you where it's gonna go. It's not really saying, look, it's almost like an even wick between, like, it's like splitting. There's like even on both sides of this price point here. So it's not really much confidence there, right? However, look at this next one. So let's say there's a strong historical price level here, and this price starts going up this one. So where do I enter in at? I want, honestly, because of how this price is here, see this level here, I would want to see I would enter in the first candle that closes above this level, because then I know it's usually strong. So look where it closes above that level, this candle. So this is almost like a perfect entry right here for me. For honestly 3 or 5 minutes, because look what's happening. This candle is now closed above this high here. We've gotten rejection from this price here after a very strong, or we got this now has become, we can say it's become a support after a very strong downward move here. A strong candle up, and then the next candle is not only a strong candle, but look, it closed above the last high. So that would be great confirmation to enter in there. But then also look at the indicators at the same level. So this is at 1403. 1403. It'll close above here. Look at the indicators. You have a cross up. This one, not cross up, but steep. And then over here on the 5 minute, also we have crossed up. Almost like the same thing. You see how it's very, very similar. So to me, this is an extremely confident trade to take right here. Because you have your historical price point here. You're watching the price actions happening here. You're keeping in mind, because this could come back and pull back below here. Then you have to start thinking about something different. But what actually happened was, pull back below. If this had closed here and another red candle formed, strong red candle, then I'm looking at, okay, maybe wait to see what it does. But this very strong green candle right after this, okay, maybe you can go long. You can go long meaning take a buy here. But I'm going to wait because I want to see this. I want to see another green candle close above this, because what happens here. Let me ask you this question. I'm sure we've all gotten to this one. What happens if we start to see this green candle? We're on Bid Forex, we're on Pocket Apps, we're on our broker, and this price starts to go, just starts skyrocketing, right? And you get fear of missing out, and then you enter here, or you enter somewhere up here, right? You start like, I got to get on this train, I got to get on this buy train, and you enter right here. You have to be conscious of the levels that are around the price, because this became a wick. The only reason why this became a wick is because this is the level here. If there wasn't a strong resistance here, this would not be a wick. So you have to be conscious of that, because if you enter a trade in this area because you have fear of missing out, you see this green candle start to shoot, it's definitely going long, it's definitely going, then you probably just got reversed on real quick because it closed down here. How many of you have had that where you see, we can all be honest, I've done it too. The price starts moving sharply, you're like, I got to get in. And then all of a sudden you get in, and then like it doesn't go anymore. It's almost like it just exhausted. It's just waiting for you to get in, and then just like went the opposite way. How many of you have had that happen to you? Yeah. That is why. Because you weren't conscious of the level that it was running to, and that it would reject a certain level at some point. That's why that happens. But if you're conscious about this, you might be like, oh, wait, let me not click that button because look how close it is to that level. So what do? You reset. Okay, if it breaks that level, now I have confirmation from the price action, from the market structure, and from your indicators, then I can get in. But while the train's running towards it, remember, there's a level that's going to have to meet. And these are real human beings who are going to make decisions. Wait a minute. There might be people who have automatic triggers for, like when this price isn't, we're selling it. Boom, sell it. And then what happens? Pushes the price down. So you have to be conscious of this. while you're trading these different levels, because these are determining how this price is moving. So you don't want to get in while the train's running right into a brick wall. You want to wait until the train breaks through the brick wall and you have confirmation from your indicators, and then you take a win here. Let me get this out the way so you guys can see more clearly. Does that make sense? If this makes sense, can you throw like a 111 in the chat or a thumbs up or anything? Let me know you guys are with me. Is this making sense? Is this helpful? Yeah. And vice versa too. It happens when the pair you're on is dumping, going down. Maybe you already assume that it's dumping, and you may be right. You may be absolutely right. Your technical analysis may be absolutely right. The price is going to go down, but depending on where you get in, there may be a very strong support that it's running into. That it may break later, but in that time where you got in the trade, it wasn't ready to break it then. So it bounces off of that to a more comfortable price level for the market at that time. Now maybe 4 or 5, 3, 4, 5 candlesticks, maybe the next candlestick, or 2, 3, 4, 5 candlesticks later, it does break down and go down. How many pairs do I mark up for trading in a session typically? I try to keep it to about 3 good ones. I go in, I see, and this comes with just a trend. The more you look at the market, you can kind of tell like there's what we considered, I wouldn't say good or bad, but there's more opportunistic price action or price movement. All right, we don't want a lot of things. I don't like to do a lot of things in consolidation. I used to, not as much anymore. There are opportunities there that you can definitely, if you catch the ranges and stuff like that. But I've been doing really well with playing the breakouts. Based off of these historical levels, based off of the price action that's happening around them, and based off of the indicators that are also giving me extra confirmation there. So I like to only mark it because it's a little bit, it's going to take like 15 minutes to like mark up. Right? If you're quick enough, you start to see it. Boom, going through, for each one, it's going to take you like 15, 20 minutes. But once you do it once, then you're kind of set. And here's the also cool thing. If you trade during the daytime or nighttime, right, then if those markers are there, if those levels are there, you can revisit those markers at any point during the daytime. If you have your alerts on, you'll get hit. Boop, you hear it on your computer. All right, sometimes I'll be in the kitchen because I have to step away for something, or I was just hungry, right? And I'll hear the bing, and I'll just come in real fast. And I'll assess like what's going on, because now I know that it's a strong level because it's backed by historical price data. I'll start to see what's happening. I'll take a trade, right? So you don't have to be here the entire time. So once you set it once, it's valuable, especially if you're doing something on a day chart or do something on even the 4-hour chart, even up until the next day. That price may be still, that might be relevant. That area, that level might be still relevant, right? But what I don't want you guys to, this is really important when you keep getting caught in this. The indicator says one thing, but like, why didn't the price continue to move that way? Well, because the market determined 4 hours ago, a day ago, a week ago, that we need to determine, like, we need to talk about, basically, like, we need to talk about this price before we let it just go do whatever it wants, right? So these levels are really, really important to pay attention to before you place a trade. Really, really important to pay attention to, so you're giving yourself the highest probability of winning a trade. Because without it, you don't know where the price is going to run into. You don't know what that price is. You don't know which point that price is chasing. Right? So even here, look how much it's respecting right this. So this now creates a range. So when you see this range, what we're looking for a breakout, either up or down. See how it's respecting it here? It's not really breaking above, not really breaking below. So here, this is, quote me on this, but you will see either a strong move up past this line, and it will continue to go up strongly, or else reverse back down. Now, I don't know which one. I'm not an oracle yet, but I will say, based off of this range, it's a very strong range. It's been going on for, seems like a decent amount of time. If this does break up, you'll see like 2 maybe green candle, maybe a small pullback back to this, or to retest this, and then it may continue up. I don't know, but check on it maybe after this call in another like hour or so. And you can tell me whether I was right or wrong. Maybe I'll check it. Okay? But that's what we're looking for. That's what we're looking for. So trades being placed around historical price points, now being evaluated, you're giving a technical analysis based off the current price action around an historical price point to understand where you should position yourself in relation to the price movement that's happening at this specific time. And being extremely patient to wait. So you see this candle just now closed above that level after you see these wicks here, right? So let's see, this red candle might come back and down test this, right? How much is my average trade? 1% of my account. I am extremely risk averse. Another thing, please. If you don't learn anything else from this call, please have proper risk management in taking these trades. No matter how good your strategy is, no matter how great your win rate is, I have above an 80% win rate most days, and I still only risk 1% per trade, which means that I don't get buried in, if I have to take a rollover, I'm not getting buried so far where it's like, risking, 6 to 10% of my account on that trade. I shut my trading down in that session if I lose 3%, which that is even still uncomfortable for me. But each trade I'm usually risking, if it's binary, then 1% of my account. So I know some people figure out, like, how do you ever get to the, it's a little bit slower, but also I don't blow accounts and I don't ever go down more than 3% on the account, so that I can always come back either a later session or the next day, and that's kind of the most important. It's kind of like going to the gym, right? Like, if you try to go too much and you blow out your shoulder or you blow out a hamstring, it's going to take you a while to get back in that gym and get stronger, right? You're going to be watching a lot of other people lift weights, right? But if you just take it easy, eventually, if you have proper. Oh, one other thing. How many of you use an Excel sheet or some type of something visual where you can say, okay, this is my percent goal or this is my goal for today while you're trading, so that you know when to stop? How many of you do that? Trading journal, okay. How many? Also, if you don't do that, also put no. There's no judgment here. I just want to know. Compound daily. Awesome. Well, if you do it, that's great. That's great. If you don't do it, please, for the sake of your account, for the trading future, please have a written or typed or something visual where this is where I stop. This is where I stop. It'll keep you from over trading. Also, you can see, because if you start losing, you're not just losing money, you're losing days. You're losing trading days. So like, you may be going backwards almost 3 days of trading. How long do you think it's going to take you to recover? So you don't ever want to go backwards, like, at least more than a day. Even I don't want to go backwards a day. Like, I lost my whole trading day yesterday. I was all hype about yesterday, and I just lost that today. Like, I don't want to feel like that. So it's good to have something visual there so you can see where you're at. Also, hey, I'm only 40 days away from, making $1,000 a day. I'm only 30 days away from making $400 a day. These are real, it's just numbers. It's just mathematics. These aren't like these made up, goals. This is based off of your account size, your specific percentage goal for the day, and then compounded over a certain amount of time. It's just mathematics. So it's very true. So like, if you have it, you continue to look at that, you don't feel the same stress. Like, I gotta make this right now. Like, no, because there's nothing wrong with making, doubling your account in 60 days. There's nothing wrong with making, depending on your account size, getting to making $400, $500, $600, $1,000 a day within the next 6 months. There's nothing wrong with that. Even the next year. So there's no reason to put yourself in a position to blow out your account so early, when within just 1 year you can change your life, your children's life, your grandchildren's life, if you just have a little bit of patience, a little bit of discipline. So, on top of the strategy, on top of these price levels and the price action and stuff like that, honestly, none of this will matter if you're putting yourself at risk to blow an account, because you won't have any money to utilize any of this. And the emotion that you'll feel, you won't able to really be focused to be objective about taking trades. So just have the patience, have something where you can look at it while you're trading, and keep you on track. So that, you can see the long-term goal, which is really not long. What is 1 year? What is 1 year, really? What is 1 year to patiently trade, make between 2 to 5%, even 1%, whatever that may be, on your account, and end up making, $300, $400, $500, $1,000, $2,000 a day? And you're only getting better as you continue to go along. So, just please be patient, trade smart, be aware of these levels, be aware of price action, continually learn. Please continually learn and join these calls. And if there's anything that I can do more to help you guys with your trading, or any questions I can answer for you, please just feel free to, right now I think we have a couple more minutes to unmute and, just ask. I'm kind of like an open floor right now. Oh, I think someone unmuted. Does someone have a question?
I did.
Okay, is that Cynthia?
Yes. Hi.
Hi.
Where were you last week when I was taking lessons?
We all have to take lessons. Yes. I apologize I wasn't there when you needed, but I hope that you got something out of the training today. That hopefully you won't take as many lessons,
Yes.
or as many harsh lessons.
Yes, sir, I did. Thank you.
My Bollinger Band. So this Bollinger Band, I think this one's set to 6, and that's very specific to, like, personalized for me. 6 to ask, what is my Bollinger Band set to? 6. So you see here, and maybe we can go through this maybe another time, but I have the Bollinger Band here. The majority of the price action happens inside this Bollinger Band. As if you're new, then we can continue obviously studying and joining the calls, and you'll be able to understand a little bit more about what that is. Then I have the EMA lines. I have a 20 and a 50. Just kind of help me understand what the overall trend is. So the 20 over 50, as you can see, if you see the green over the red, I color coded them for a reason. The lower EMA, moving average, EMA meaning moving average, and then the 50, you see the lower moving average over the higher one, 20 over 50. That's why I color coded it green. It means there's a strong bull trend. If this was the opposite, if this was flipped opposite and the red was over the green, it's usually a bearish trend. So, I'm seeing this pattern right here. This is looking good for a long if this breaks up. But anyway, is there any other questions? I'd like to know more about the book you were talking about. Came in kind of late. Naked Forex. Yes, Naked Forex. Naked Forex is about a couple of different topics. It's about the common misconceptions of novice and expert traders. It's about how to analyze the charts without having to use a lot of technical indicators, but also that will help you use the technical indicators. But being able to basically take a snapshot of what you're seeing in terms of candlestick, recognize the patterns, and then be able to know where the market is. And when I say where the market is, I mean, is it a bull trend? Is it an uptrend? Is it a downtrend? What levels there are. Like, levels are huge things. Like one of the first chapters about levels. There's a lot in that book. It's not a very long book. I actually have it on my phone. I read it on my phone, PDF version. Someone gave it to me, but I highly, highly, highly recommend it. Do I use Cash Trap? No, I do not use Cash Trap, and that's just a personal preference for me. I have used Cash Trap. I have nothing bad to say at all about Cash Trap. People are making money out of it. I've made money off of it. I just have chose to go, this had nothing to do with Matt or anything. It's just my own personal preference that, like, in the morning time, I just get into a flow where I just wake up, I open my laptop, I go through the same process I just showed you, and this is how I take trades, and I feel pretty confident with my win rate with it, and it's been proved to be pretty good. So I just kind of stick to what's been working for me. What is a good beginner book to learn more about reading charts? Start with Alex. Start with the Naked Forex, and also continue to join the trainings, and you'll learn a lot. Be around traders, and you'll learn trading. Well, be around good, consistent traders, and you'll learn good, consistent trading. What times do I trade? I trade in the morning, between 7 to 10. And I say 7 to 10 because not that I'm on the computer the entire time, but usually in that time I'm finding the setups, or I'm taking trades. It's not like I'm sitting, like I have a very specific, I have to be on my computer at 7 and I end at 10. It's just like usually I'm finding that I'm making the most of my trades in that time period. Oh, I'm on Eastern Standard Time. Eastern Standard Time.
All right, awesome. All right, guys, if you enjoyed